Today we'll be discussing section 36. 36 gives out the list of the expenditure that would be allowed as deduction under the PGBP. So in that, the first item is the insurance premium paid on the stocking trade would be allowed as deduction. It's a very normal practice that the businessman will be insure their stock by paying a premium amount. So the premium whatever the premium amount they are paying would be allowed as a deduction. Now the next one, it is also an insurance only, but that is in a health insurance. Correct? Any amount that has been paid as in a premium toward the health insurance of an employee would be allowed as deduction, subject to conditions. What is the condition? First, that health insurance has been taken on the health of all the employees, and second, it should not be paid in a cash. This condition was not there for the stock in trade. So if this for the stock in trade, the insurance premium, even if you had paid in a cash, still the 36 would allow you deduction. But for the employee health insurance, there is a precondition, it should not be paid in a cash. Then only the deduction could be available under section 36. Next, the health insurance is different from the life insurance. Correct? If you had taken a health insurance for the partner, then that would be allowed as deduction. But you had taken a life insurance for the partner, then it won't be allowed as a deduction. But there is a concept of the key insurance policy. You do remember? Yeah. Key man insurance policy. So if there is a key man insurance policy premium paid for the partner, then that would be allowed as deduction. But generally, the life insurance won't be allowed as a deduction. Only the health insurance would be allowed as deduction. The next, any bonus and the commission payable would be allowed as deduction, even that amount exceeds as whatever the minimum prescribed under the bonus act, then still the deduction would be available. Try to understand the section 30 to 37 gives out the expense that is allowed as deduction. But there are certain sections which disallows the expenditure, correct, on not satisfying certain conditions. For an example, 48.2, 48.3, 43b, 40 small a, 40 small b, correct. So 36 says that the bonus and commission would be allowed as deduction. It never talked about the payable or paid. But 43b is there. We'll be looking out that in detail, but that was in a link between these two, so I had taken this. 43b says that the bonus and commission, if it is in a payable, it has not been paid before the due date of filing of return, then it won't be allowed as deduction. That bonus and the commission has to be paid before due date of filing of return, then only the 43b allowed as a deduction. 36 won't specify the condition, but the 43b says that even the 36 overriding to 36, it says that even the expenses has been allowed under the 36, it would be disallowed under the 43b if it has not been paid before due date of filing of return. The next one, interest on borrowed capital. This is a very commonly very common expenditure for all. What is that? If it borrowed a capital for the purpose of business, correct, you would be paying you would be paying interest on that borrowed capital, and that would be allowed as a deduction. But there are different sections which have a link with this, so I tried to put down all the sections together, so having a better discussion on it. So in that, the first one, there are two case laws. If you have taken a loan and that loan had been given to the director, obviously for his personal purpose, correct, and you not charge any interest to the director, correct, and you are paying the interest, whether that would be considered your business expenditure, whether that would be allowed as deduction? No, it won't be allowed as deduction under the PGBP. But if I change my example, if I taken a loan for the loan and I had given that loan for the subsidiary, I'm in a holding company, I had given my subsidiary, correct, as a business expediency, my whole I invested a huge amount into the subsidy, and if the subsidy won't able to get in a finance, it may go into the losses and may close out the business, so I would suffer huge losses. That's the reason I had helped out through the capital. Through the loan, but I not charge any amount of interest to the subsidy, because already he is a loss making company, he won't able to pay the interest, so I not charge the interest. I had given an interest free loan to the subsidy, but that amount is borrowed by me, on that I am paying the interest. Whether that would be allowed as deduction? Yes, that would be allowed, because it is a general business expediency. What is business expediency means? It is general business principle. To run my business smoothly, it's a need of an hour, and that the reason I'd given. So that would be allowed as an expenditure. Whereas if it has been given to the director without charging the interest, that interest won't be allowed as a deduction. Are you clear with it? The next, if the interest, there are disallowances section, I told you that I would be discussing that in detail, but there is a correlation, so I am discussing it right now. So the interest is payable to the banks and financial institution, I will keep into the one bucket, and interest payable to the others, non to the non-financial institutions, just like in a personal, correct, to a company, to a firm, correct, that I would take into the one bucket. So I had divided my whole borrowing into the two part. The A part, the first bucket is in a banks and financial institution, and the second bucket is other than the banks and financial institution. So now the interest is payable to them. If the 43B says that if there is in a first bucket of a banks and financial institutional interest that is to be paid before due date of filing of return, then only the deduction would be available. Otherwise, it would be disallowed. What is it? It is a bank interest payable to the banks and financial institutions. It should be paid before due date of filing of return. Otherwise, this would be disallowed. 36 may allow, but 43B disallow karega. Have you got it? 36 to allow karega, but 43B says as whatever has been told, overriding hai 36 ko. 36 mein kuch bhi bola ho, but if you won't satisfy the 43B condition, then the expenses would be disallowed. If the interest is in another bucket, correct, that is not payable to the banks and financial institution, then there must be a TDS, and the TDS provision says that the TDS is required on it. If both has been done, then only the deduction would be allowed. Otherwise, the expenses would be disallowed. Try to understand that this is all the disallowances section. That is, it has not been given into section 36. 36 was bolta interest or this would be allowed as a deduction. But there is another sections which take the reference of the interest. That's the reason I am discussing both together. So the interest would be allowed as deduction. Agreed 100%. Correct. So the interest would be allowed as a 36th volta interest would be allowed as deduction. But there are disallowances sections which talks about the disallowances if you won't satisfy the condition given under the disallowance section. So what is the one? If the interest is payable to the banks and financial institution, it must, TDS is not required. It must be paid before due date of filing of return. If interest is of another bucket means other than the banks and financial institution, on that TDS is required as per the TDS chapter. And if you are not deducted the TDS, the expenditure won't be allowed as a deduction. Clear with this? Next, there is a section 32 explanation. We had seen that if assets put to use the pura interest, it should be added to the cost of the asset, correct? And on that you claim the depreciation. That portion won't be allowed as deduction under section 36, which is required to be capitalized. Hopefully clear with the interest part. The next one, I had missed out one. If the loan has been taken for the payment of the income tax, in fact, the income tax is not allowed as deduction under 40 small a. Correct. You had taken a loan for the payment of the income tax, and on that you had paid the interest. Whether that would be allowed as a deduction? No. The basic expenditure won't be allowed as deduction. I had taken a loan to pay that. So interest on that won't be allowed as a deduction. So the interest paid on the loan taken for the payment of the income tax won't be allowed as a deduction. 36 won't say anything, correct, but there is a disallowances sections. We will be discussing that in detail. But there is a correlation, so I discussed it. The next, there are various kind of employee benefit funds or welfare funds, kind of the Provident fund, then your gratuity, the pension fund, correct, superannuation scheme. Correct. So all this in that fund, there is generally a concept, the employer also contribute and the employee also contribute. So the employer contribution to that would be allowed as a deduction. What about the employee contribution? Employer ne contribute kiya, that can understand it is an expenditure, so it should be allowed as a deduction. But the question arises, what about the employee contribution? When that is an expenditure for the employer? नहीं, वो तो मैं उनके सैलरी से कट करके पे करती हूँ ना. So how that can be considered as a expenditure for the employee? If it is not an expenditure for the employer, then how I will get the deduction? Are you clear what I am trying to explain you? I will repeat. We had seen that there are various various employee benefit or the welfare funds are there. For an example, the Provident Fund, pension scheme, correct, superannuation. In all that, the employer as well as the employee both do contribute it out, correct. So now the question arises whether that would be allowed as an expenditure and whether that would be allowed as a deduction. So section 36 says that the employer contribution to the schemes, different schemes, the Provident Fund, superannuation, annuity, or it could be a pension, would be allowed as a deduction under section 36. What about the employee contribution? Employee contribution, is it an expenditure for the employer first of all? तो बाद में deduction का सोचते, correct? It is an expenditure for the employer, the employee contribution. जो employee 12% contribute करता है PF में, whether that is an expenditure for the employer? Actually says no. क्यों? Because the employer is not paying out of his pocket. He is deducting from the salary of the employee and paying. So it should not be considered as an expenditure, correct? But what it says that when the employer had deducted from the salary of the employee, it had to be considered as an income of the employer. जैसे the moment I deducted from the employee's salary, it is considered as my income as per the income definition under the income tax. Okay, now but that was not my income. Yeah, agree. If you contribute to fund, I would allow it as an expenditure. So एक तरफ income, expenditure, ultimately no effect. Got it? So the employee contribution would be first considered as an income, and the later on when you do contribute to the respective fund, it is allowed as a deduction. Clear with it? So we'll discuss into the detail. So the employer contribution, the first in that is the employer contribution to the Provident Fund or the approved superannuation fund would be allowed as a deduction. The next one, in that, I told you that the section 30 to 36 talks about all the 37 talks about all the expenditure which is allowed as deduction, whereas there are certain section which talks about the disallowances. In that, there was one section which talks about the disallowances of the contribution to the Provident Fund, and that is a 40A9. It says that the contribution toward the non-statutory funds. What is meant by non-statutory or the non-recognized funds? Correct. If that Provident Fund is not recognized or that superannuation fund is not recognized one, correct, then the deduction won't be available. So the employer contribution to the Provident Fund would be allowed as deduction, but the 40A9 put out a condition to get a deduction under section 36. What is the condition 40A9 provided out? It should be recognized one, then only the deduction could be possible. Otherwise, the deduction won't be available. Clear with it? The next one, the employer contribution toward the pension schemes. I told you that there could be a Provident Fund, there could be a pension. Correct, the pension fund also allowed. The section 36 itself put down no disallowances section. I am talking about the 36 itself says that the deduction won't be more than 10% of the salary. And what is the definition of salary? Basic plus DA if it is a farm part of the retirement benefit, and commission if it is a fixed percentage of turnover achieved. Correct. So the employer contribution toward the pension scheme should not exceed the 10%. Correct. If it exceeds the 10%, the income tax says that I would allow a deduction under section 36 only up to restricted up to 10%. In excess of that, the deduction won't be available to the employer. So how much deduction is possible to the employer? Only the 10% of the salary. And what is the definition of salary? Basic plus DA plus commission. DA if it is a farm part of the retirement benefit, and the commission if it is a fixed percentage of turnover achieved. Are you clear with it? The next third one, employer contribution toward the approved gratuity fund, that is also allowed as deduction. Again 48(7) says that the contribution is to unrecognized gratuity fund only be allowed as a deduction, just like a recognized Provident Fund should be recognized one. Same way the gratuity fund to whom you are making a contribution should be a recognized one, then only the deduction is possible. There is also the 43B, it talks about the employer contribution to the Provident Fund, gratuity or the pension scheme. It says that what are the employer contribution toward the above funds? It should be actual actually paid before due date of filing of return, then only the deduction would be available. You had made only the payable in a books of accounts, you won't get a deduction under section 43B. 36 may allow you, but the 43B restrict the deduction. It says that the employer contribution to the recognized provident fund, recognized superannuation fund or gratuity fund should be paid before due date of filing of return, then only the deduction could be possible. Now, the employee contribution. I already told you that the employee contribution is as such no cost to the employer. But the income tax says that when the employee had contributed, correct, when the employee had contributed means what? When the employer had deducted from the employee's salary, correct. So, as soon as it's deducted, it has become income of the employer. Correct, but actually they are speaking, it's not an income of the employer, he is just a pass-through person. Correct. So, whenever he is giving a contribution to the approved fund, that time the deduction would be allowed. However, but now there is a conflict between the interpretation of the section. The first I told you that as soon as you are deducted, there is no conflict on that part. As soon as the employer had deducted the amount of the PF, superannuation, gratuity from the salary of the employee, it would be considered as income in a welfare fund. Now, we'll be looking at the employee contribution. So, first of all, the employee contribution, I told you that toward the welfare funds is not an expenditure for the employer. But as soon as the employer deduct it out, the employee's contribution toward the welfare fund, as soon as they deduct it out from the salary, then that become an income of the employer. Whenever the employer contribute it out to the funds, that time that would be allowed as an expenditure under section 36. So the 36 says that any sum received by the employer as an employee contribution toward any of the welfare funds would be considered as income of the employer. And the deduction says that the deduction shall be allowed from the income. The employer will get the deduction when if it has been paid to the fund. Now the question arises, the 43B does not take the reference of the employee contribution. It takes the only reference to the employer contribution to the welfare fund. So the 43B nothing to do with the employee contribution to the welfare fund. Now what about then? The 36 says that if it has been paid before the due date, correct, then the deduction should be allowed. 36 itself says that it should be paid before the due date, then only the deduction would be available. Have you got it? But the question arises, which due date? Whether the respective acts, the PF Act also specified the due date for the making a payment or due date of filing of return. It does not specify anything. So according to my interpretation, if the act want to take the reference of the due date of filing of return, it would have mentioned under the 43B. जहाँ पे employer contribution बोला है वहाँ पे employee contribution would have been specified. लेकिन 43B does not specify the employee contribution. Means this is nothing to do with the due date of filing of return. It means that the employee contribution to the Provident Fund would be allowed as deduction if it has been paid before their respective due dates. Means superannuation have their due date, correct, Provident Fund have their own due date. So it should be paid before the due date, correct. Then only the deduction would be available. आपने इसके बाद but due date of filing of return के पहले pay किया, then the deduction won't be available. Which contribution? The employee contribution का deduction नहीं मिलेगा. The employer contribution का deduction मिलेगा. Employer contribution you could pay up to the due date of filing of return. But the employee contribution दूसरों का पैसा है ना, आपने कट करके रखा है. It should be paid promptly before the due date of the respective acts. Correct? It cannot be handed over up to the due date of filing of return. Have you got it? But the Delhi High Court had given a controversy view. It says that the deduction would be available. Even the employee contribution also need to be paid before due date of filing of return. Correct? मतलब जैसे for an example, it's a PF for the month of January. You should pay it by supposedly 21st of the May of the following month, sorry 21st of the Feb, जनवरी का पीएफ है 21st Feb तक पे हो जाना चाहिए. You had not paid it out. Correct, you had paid in the month of May before due date of filing of return. Have you got it? Then that employer contribution और employee दोनों भी तभी पे किया. So now the question arises whether it would be allowed as a deduction. The employer contribution, no doubt, because employer contribution specifically says that it should be paid before due date of filing of return, so it would be allowed. What about the employee contribution? According to my view, according to my interpretation, it should not be allowed if it has been paid after the 21st of the Feb. Means जो भी PF का ड्यू डेट है उसके बाद if it has been paid, then it should not be allowed. But the Delhi High Court says that no, even it has been paid before due date of filing of return, it should be allowed. So that is in a controversial review. You can take it out any of that. That could be fine. The next one, we had seen that at the time of depreciation, what about the animals on the livestock? You won't get a depreciation. But there can be for certain industries, the animals could be not as a stock in trade, there could be a capital asset. For an example, if there is a security agency business, if I purchase the dogs, correct? So that is a live animals, livestock it is there. So is it my capital expenditure or revenue expenditure? The life of the dog is more than a year. I going to get the benefit out of that more than a year. So it is definitely not a revenue expenditure. So it is a capital expenditure. The deduction won't be available. Now the question could arise, can I get the depreciation? No, specifically the plant and machinery does not include the livestock. So I cannot get a depreciation. So what to do with the animals cost then? The one side you say no depreciation, another side you says there is it is not a revenue as a revenue expenditure. It is not a revenue expenditure, so deduction could not be possible. So 36 gives the reliefs for this. So section 36 says that when the animals other than the stock in trade has been permanently useless or died, that time the deduction would be available. When you'll get deduction and not at a time of a purchase. When you'll get deduction when that animals become a useless or that animals died. That time you will get the deduction. What is the amount of deduction that you will get? Whatever the cost of the purchase minus any recovery from their scrap or any amount of the recovery that you can made out to that useless animals. Correct, that should be reduced from the cost and the remaining amount would be allowed as a deduction. Have you got it? So no depreciation, no deduction at the time of a purchase, but when the animal become a useless, that time you will get the deduction. The whatever amount of the deduction you will get, the cost minus the amount that you would recovered out of that animals would be allowed as a deduction. Next, are you clear with it? The next, this section is only for this line item is only for the company SSC. If there is a company SSC incur the expenditure on the family planning, correct, you do know the importance of family planning for India. Correct. So if the company incur any expenditure related to the family planning promotion, that would be allowed as deduction. If there is a revenue expenditure, 100% deduction. If the company had incurred any capital expenditure, the 1/5 of that would be allowed as deduction this year. But that amount is need to be amortized over the 5 years. Have you clear with it? So, but this deduction is only to the company, not for the other assessee. Means if other assessee incur any expenditure toward the family planning promotion, the deduction won't be available. Next, security transaction tax. What is this concept? You may buy the shares as in a capital asset or may as a stock in trade. Correct. Whatever the case may be, on each purchase and sell, you will have to pay security transaction tax, STT you will have to pay. On each purchase and each sell, on each transaction on the stock exchange, you will have to pay the STT. So, if I am paying an STT, whether that is an expenditure for me, actually yes. Correct. Whether I will get the deduction under the PGBP or not. If that asset is in a capital asset, correct, just shares I had purchased, it's in a capital asset for me, then there is no question of getting deduction under the PGBP for the STT paid on it. Correct. हाँ, अगर वो capital asset नहीं है, if it is in a stock in trade for me, that shares are stock in trade for me, means I am engaged in the business of dealing in the shares only. Correct? So that shares become my stock in trade. And on such shares, if I had paid STT, then that would be allowed as deduction, because the income is to be charged under the PGBP, so the expenses would be allowed as a deduction. But if I had purchased a share as a capital asset, whenever I will sell it out, the income would be taxable under the capital gain. So the PGBP won't allow you deduction of STT. Have you clear? So the STT, if it is paid, allowed as deduction if the profit has been taxable under the PGBP. Means specifically if that shares has been purchased as a stock in trade, then only the deduction would be allowed. अगर capital gain रहेगा, then means if you had purchased the share as a capital asset, then deduction could not be possible. Next, same with the commodity transaction tax. What is a commodity transaction tax? We do know that there is a derivatives under the commodity as well. What is mean by derivative? There is a future options under the commodity markets as well. So the in each of the commodity transactions, you need to pay the STT. A commodity derivative transaction, you need to pay the STT. So that STT would be allowed as deduction if that commodity transaction is in the nature of business. Correct? If it is in the nature of the capital asset, then that would be allowed as a deduction. So that income, if it is taxable under the PGBP, you will get the deduction for that. Next, discount on zero coupon bond. What is mean by bond? Bonds and debenture are almost the same. If the debenture has been issued by the public sector company, it has to be called as a bond. Correct? Zero coupon. What is mean by coupon? Coupon is nothing but the interest rate. Zero means there is no interest on the bonds. Correct? So why the other person will be giving you money? Debentures subscribe क्यों करेंगे कोई, या bonds को subscribe क्यों करेगा if you are not paying a interest? Correct? Obviously it could not be possible. You will have to pay the interest in other form, that is called a discount. Means originally the face value of the bond is 100. I will be issuing the bond at 85 rupees. So the 15 rupees would be the discount. At the time of redemption, the bond will be redeemed at 100. So ultimately the 15 rupees, that discount is nothing but the interest. Have you got it? So that discount amount would be allowed as deduction to the company over the life of the zero bond. Means if the life of the bond is a 5 year, so that 15 rupees discount is to be amortized over the life of a bond on the pro rata basis. Have you clear that amount of the discount should be amortized over the life of the zero bond on the in the proportion of on the pro rata basis. Clear with it? So the next item, that is the most important one, is a bad date. What is mean by the bad dates and whether that would be allowed? Whether the provision for the bad date is allowed as deduction under the PGBP or not. So we'll discuss one by one all. So the first of all, the provision under the PGBP won't be allowed as deduction. If it made a provision for the bad date, correct, a reserve for the bad date, whatever the name could be, if it is the form of the provision, won't be allowed as deduction. When the deduction could be possible, if there is an actual bad dates, then only the deduction is possible. But that also subject to some conditions. So if there is a bad debt that is allowed as deduction under section 36, if the debt has been treated as an income in the earlier year. For an example, I made a sell to the A party, correct, in the previous year. Correct, that time as money I had not received, but as I follow the accrual system, I had booked the sell as under the PG, under my PNL, I had booked that income, and on that I had paid the tax as well. Correct. The later on, that sell amount I am not able to recover from my my debtor, correct, from my customer, that is a Mr. A. So that had become a bad debt. That would be allowed as deduction. It says that should be treated as an income in any of the preceding previous year. Yes, it was included in my sales in a preceding previous year. So the bad debt would be allowed as a deduction in this year. But subject to one more condition, it says that it should be written off in the books of account. Books of account में write off करना जरूरी है. एक account credit करके bad debts को debit करना जरूरी है. If you won't write off in a books of account, you won't get a deduction. Correct? So if you are not able to recover the amount, then write off in the books of account. अब income tax वाला आके बोलेगा नहीं नहीं, you would able to recover. No, they don't have an this income tax specifically says that assessee need not to prove it out that the amount is non recoverable. He just need to put a write off in the books of account. खत्म. He need not to prove कि उसका बैंक करप्सी हुआ है, मैंने इतनी बार follow up किया. No need to prove. Correct. You simply write off in your books of account, deduction would be available. But in the case of the banks and financial institution, there is an exception to the first condition. What is it? Generally, the banks and financial institution gives. But for the banks and financial institutions, what had happened when they give the loan to the customer? That time it has not been booked in their income. Correct. So if the tomorrow if that customer won't pay the loan, it become a bad debt for them. So for them, the first condition need not to be satisfied. It says that if the debt represent the money lends, then he need not to be satisfied the first condition. Correct. But the second condition need to be satisfied, should be written off in the books of account, then only the deduction would be available. Clear with it? Next, the bad debt has been allowed as deduction if the later on and then the recovery of the bad debt. What it mean by that? Today I felt that the bad debt I am not able to recover the bad debt amount. Correct. So I written off in the books of account, but I won't stop the trying of recovery. I was still trying of the recover the amount. I got success. I got a recovery. Correct. So this 41(4), it's called deemed profit section. It says that the recovery of the bad debt would be taxable. Correct. The bad debt which earlier you got a deduction, if later on in any point of time, even your business is not in a continue, and if you recover the amount, then it should be taxable under the PGBP under section 41(4) as a deemed profit. So the recovery of the bad debt is taxable under the PGBP if earlier you got the deduction. If I haven't allowed a deduction in an earlier time, correct, then there is no question of the taxing of a recovery. The next one, there is two important case laws under this. There is a Veerbhadra Rao related to the bad debt. Try to understand the concept. There is a person. He had done a business. Correct. He had been sold out a certain goods to the B, and he had taken into the A has taken in his income. Okay, then A has transferred his business along with all the assets and liability along with the debtors to the B. Correct. So A has considered in his income, and now the business has been transferred to the B, and now the B is not able to recover the debtors amount. Correct. So for whether we will get the deduction of the bad debts if we write off that amount into the books of account. Correct. A ने sell किया, so the income has been booked in the A's hand. Correct. Now the B want to claim the deduction. So when you can claim the deduction, so the first is that the debt was treated as an income in the earlier previous year. Whether it has been considered as an income, yeah, it has been considered as an income of not of a B, of an A. Correct. Can the B get a deduction? The Veerbhadra Rao case says yes. Even it has been taken, it should be considered as an income in any of the earlier previous year, not necessary in the hands of B. Correct. किसी के न किसी के हाथ में as an income it has been taxable. Correct. So now if that amount is not able to recover, then the bad debt should be allowed as a deduction. Have you clear with it? The person who is claiming the bad debt and the person who is including in an income should not be same. It could be different. Correct. That amount should be included in an income in any of the earlier year, and it has been taxed. That is a sufficient. So the B would be allowed as a deduction as per the Veerbhadra Rao case. Even it has not included in income of a B, it has been included in income of A. Clear with it? Now, supposedly the B had taken a deduction and the B has transferred the business to the C. Okay. And the C had done the recovery of it. I told you that just now under the 41(4), the recovery of the bad debt is taxable. Kab the recovery is taxable? If I got a deduction earlier and then I done the recovery, then it is taxable. Correct. Now what had happened? The business has been transferred to the C. Correct. And the C has recovered the bad debt amount. Now whether the bad debt recovery would be taxable in the hands of a C? What do you say? Yeah. actually speaking, the recovery amount should be taxable, but the PC Kaimal case says that no, it won't be taxable in the hands of C. It says that the person who had claimed the deduction and the person who had made the recovery, it should be the same, then only the recovery would be taxable. Deduction के लिए it says that the person who had किसी के भी हाथ में include किया तो चलेगा, the person should be the same, correct? But the recovery taxable के लिए it says that the person who had claimed the deduction and the person who had made the recovery, both should be the same, then only the recovery would be taxable under the 41(4). So both the cases are in the favor of assessee. Clear with the bad debt? It's actually very simple. The bad debt is allowed as deduction only when write-off, and it should be included in income in any of the preceding previous year. The recovery would be taxable if the person who had claimed the deduction and the person who had done the recovery would be the same. Correct? Then recovery would be taxable under the PGBP under section 41(4). So that all about the 36 and 41(4). Next, I told you that the provision for the bad debts is not allowed as deduction. Correct? But there is an exception to this. When the provision for the bad debt is allowed as deduction, so that is for the banks and financial institutions. Even they had made a provision for the bad and doubtful debt, that would be allowed as a deduction because it is an RBI scheme that they need to make a provisions. So for the Indian bank, 8.5% of the total income plus 10% of the aggregate average advances given by the rural branches, this much maximum amount of provision would be allowed as a deduction. Second, for the public financial and state industrial corporation, 5% of their total income, and for the foreign bank, their 5% of the total income. Only exception is of an Indian bank. For them, that is 88.5% of the total income, and 10 plus, in addition to that, the 10% of the aggregate average advances given by their rural branches. Try to understand, if I am allowing you provisions, I won't allow you deduction for the bad debts. Already provision को deduction दिया ना, जब actual bad debts होंगे, that time you should debit your provision, not to the P&L. Correct? So at the time of the provision, I would allow you deduction. जब वो actual bad debts हो जाएंगे, that time deduction won't be available. But if the actual bad debts exceeds the provision amount, then the excess amount would be allowed as deduction. For an example, you had made a provision of 10 lakhs and the actual bad debts turn out to 12 lakh. Correct? Then the 2 lakh would be allowed as deduction, but not the 12. Bad debts 12 way. Correct? Like already I had made a provision of 10, na? Correct? So the 10 I had allowed you at the time of provision itself. Correct? So that now the 10 lakh won't be allowed again. Now you will get the excess of the bad debts. Excess means the bad debt in excess of the provision would be allowed as a deduction. Have you clear with it? The last one. Any amount has been transferred to the reserve. Actually, the amount transferred to the reserve is an appropriation of profit. It is actually not an expenditure. So generally it should not be allowed as a deduction. But there is an exception to this rule again. For the banking company, they need to transfer a certain amount to the reserve. Correct? So income tax says that the list of the following amount would be allowed as a deduction. Okay, generally the amount transferred to the reserve won't be allowed as a deduction because it is appropriation of profit. It is not an expenditure. Correct? But for the banks and financial institution, the deduction is available, the list of the following. In that first, the actual amount transfer. The second is 20% of the profit computed after all the deduction, disallowances and allowances, but before claiming deduction under this. ये deduction छोड़ के बाकी what are the profit of that banking company or the financial corporation would be allowed as the profit का 20%. Correct? The second figure. And the third figure says that the 200% of the paid-up share capital plus general reserve as on the last day of the previous year minus the accumulated balance of the special reserve as on the first day of the previous year. So whatever the paid up share whatever the capital and the general reserve do have, uska 200%. So for an example, I have the capital amount of 100 lakh, उसका 200%, so it comes to 200 lakh. So by accumulated balance in the special reserve account, if it is 190, so what is the maximum amount I can contribute? Is it 10? So 200% of the capital plus reserve minus the accumulated balance of the reserve and the first day of the previous year. ये figure कब की है? As on the last day of the previous year, and this figure is as on the first day of the previous year. Correct, and that is the difference amount. Correct, means the excess amount would be allowed as a deduction in the list of the three. This is the third item. So the first, what is the amount you have transferred to the special reserve? The second, 20% of the profit after giving effect of all the allowances and disallowances under the PGBP. The third one is the 200% of the paid up share capital and the reserve, correct, general reserve as on the last day of the previous year, minus, correct, accumulated balance in the statutory reserve account or the special reserve account as on the first day of the previous. So the list of the following would be allowed as a deduction. If it withdrawn any amount from the reserve, that would be taxable. Generally amount withdrawn from the reserve is not taxable. Correct, लेकिन ये exceptional reserve है, यहाँ पे transfer किया, you get a deduction. If you withdrawn from that, then it would be taxable. So this is all about the section 36.